All right, so is the recession finally here? Can we confirm that we are in a recession? Well, let's take a look at today's data. We'll answer that question as we look at two important data points that came out today, non-farm payrolls and number two, ISM manufacturing. Now, before I move on, I just want to say my name is Daniel. Thanks for watching. You're watching InfoVest. We talk about all macro news, the stock market, and break down what's happening in the economy here on this YouTube channel. We have other more sophisticated programs such as our courses and our private chat room for more serious people who are interested in the markets. You can take a look at that by just visiting www.inforvesting.com, and the link is in the description for you to read up on that. Now, let's talk about today's data, right? First things first, the data from non-farm payrolls came out, and I'm looking at the numbers here right now, and it looks like that the number came out at 223,000 compared to the expected of 200,000, and this is the headline non-farm payrolls jobs number, right? So that's basically saying when you look at the actual number versus the expected number, there was slightly more jobs that came in for last month, which is you would think a good thing. Now, going more further into this report, let's take a look at the other data points as well. When we look at average hourly earnings month over month, the number came in at 0.3 versus the expected of 0.4. Now, what that basically tells us is that the earnings, the wages has slightly come down, so that is less, that is basically disinflationary, right? So it's not inflationary, it's a good sign. So number one, you had strong jobs, plus you had the average hourly numbers come in lower, which suggests kind of weakness in the wages, which suggests also weakness in inflation. So something that the markets want to look for is that inflation and prices are coming down, which is why the markets have been selling off all of 2022 and why it can continue to come off if inflation doesn't ease off and doesn't come down. Now, there are much more other inflation metrics to look at, which we will look at in the coming days, but this is one to point out at when you're looking at this report. Now, the other data point that is important is the participation rate, which came in at 62.3 versus 62.2%. So the same, more people are participating in the labor market. And now here's the kicker. The kicker is that the unemployment rate came in much more lower than the expected. The expectation was the unemployment rate was going to be 3.7%. It actually came in at 3.5%. So that was very interesting there. Now, the reaction in the stock market and the bond market was right away you had a big pickup. The stock market went up, the bond market went up. We had a little bit of a pullback, and then finally we had also the revisions for the average hourly earnings come out, and you had Nick Timiraos, don't know if I'm saying his name right, but from the Wall Street Journal, basically say that the revisions came in for the average hourly earnings lower than expected. So the revisions was actually, I think it was, the difference was about 0.2%. So much lower than expected, which also created the bond market and the stock market to jolt up and rally even further. So this happened all around 8:30 a.m. and then around 8:50 it had another push up higher after the revisions from the average hourly earnings. And then came around 9:30, the market opened, where you had a little tiny pullback followed by a push up higher again in stocks and bonds. Now, stocks pushed up higher and hit basically a wall around, let's say, a resistance around 9, I think it was 9:37 a.m. around there, but let's round it to 9:40 a.m. And around there, you saw that there were less buyers and more sellers coming into the market. And we saw bonds also kind of retrace, stocks retrace, but stocks retraced a lot of their move. If you look at the S&P 500, retraced basically 75% of the move. And when you look at NASDAQ, basically went back to P1, which retraced basically 100% of the move. Now, two reasons for that. Number one is one could argue and say, if you're looking at the markets, either 50% of the people looking at the markets half glass full, the other 50% looking at the markets half glass empty. And for those who are looking at the markets saying that the unemployment rate is better than expected, jobs report is better than expected, even though that the wages number has come down, which is showing signs of relief in wages and inflation, it may suggest to you still that the Fed has to continue the rate hikes. And because the unemployment rate was stronger than expected, well, that 50% of the people could argue that could cause the Fed to ramp up rates even more, which could be one reason for the sell-off after the market opened. The other part is also profit taking, and the third part also, you had ISM manufacturing coming in 30 minutes after, which happened to be around 10 a.m. So very, very important. So there's lots that you could argue for that sell-off. But the biggest thing is when you're trading markets like this, you want to make sure that no matter how much conviction or belief you have on a certain direction, if the markets are telling you otherwise, you have to be very important. It's very important that you listen to the market. You listen to what they have to say. You listen to basically the reactions that you're basically getting from either sellers or buyers. And if the market wants to go down, you go with the flow. You go with the flow. If the market wants to go up, you go with the flow there. Now, 10 a.m. is when ISM non-manufacturing PMI number came out, and this was the game changer for all of today. So basically, you had the ISM non-manufacturing numbers PMI coming at 49.6 versus the expected of 55. So hear that again. That's a huge drop. 49.6 was the actual number versus 55, which was the expectation. And that basically brings ISM to the lowest level since 2020. Right? Since 2020, we saw a drop, something similar of this in the last recession, and we haven't seen that since 2020, and now we have seen that today on the ISM number, non-manufacturing PMI, coming at 49.6. And the biggest thing is that's a pretty big gap, 55 versus 49.6. And not only you got such a big gap, the number also is below 50, which signals recession, recession, recession. So definitely, after looking at this data and looking at the numbers, you could argue that, yeah, we are in a recession. This is the beginning of the data that's showing the weakness. Like we've been saying in every video, last couple months, I've been talking about it every single day, saying that recession's coming, recession's coming, recession's coming. Finally, we're starting to see the cracks of this, and this could continue and this could escalate. Now, when you look at the ISM report also, you see prices component came in at 67.6 versus the expected of 70. You had new orders drop 45.2 versus 56. And the employment component came in at slightly lower as well, 49.8 versus 51.5. The business activity number also came in at 54.7 versus 64.7. So there's about 8 in the ISM services component, 8 parts were down, and there were only 2 parts that came in higher, which were the new export orders and the inventory sentiment that came out higher. Now, what came out lower was basically everything else, and new orders was you saw a very big contraction in that number, which is again suggesting that less people are ordering. So prices come down, backlog orders was okay, but most importantly, the headline number really came down and came off. So very important here that the ISM numbers are signaling to you here that yes, recession is in play. Watch out. And the reaction from stocks and bonds was basically a rally up, and we rallied all day because it signals that hey, the Fed needs to slow down. A recession would indicate that inflation would come down the path, down the road, and that yes, there would have to be some sort of rate cuts as well down the path. So let's see how long this rally lasts, and we'll see how long also this